Welcome back. You are still watching Power Lunch Southern Africa. Stats SA has this morning released South Africa's GDP data for the third quarter, showing a decrease of 0.3% quarter on quarter. This being a step backwards following an increase of 0.4% in Q2. Market consensus seems to be that South Africa's GDP growth remains sluggish, but there is potential for recovery. I am joined by Maarten Ackerman, Chief Economist of Citadel, for a conversation on the local and global economic outlook for the year ahead. Maarten, welcome to Power Lunch Southern Africa, and thank you for your time. Now, given the data, the Q3 data that has come up from Stats SA this morning, I think that's probably the best place to start this conversation. Probably a bit of a surprise that we are seeing a contraction quarter on quarter. Some of the economist sentiment I'd seen leading up to today was an expectation around 0.4, 0.5% increase. What is your view on the 0.3% decline we are seeing quarter on quarter?
Yeah, unfortunately, that is a disappointment, but it shows us what the difference is between what really plays out on the ground and call it the positive sentiment after the government of national unity. Positive sentiment can take you so far. That can support the market to rally. It can support the rand to get stronger. But before we see implementation, what's happening on the ground, which is a reflection today with the sprint, is not changing yet. So you're 100% right. The expectation, well, the Bloomberg survey was for the number to be closer to 1%, and we only got a 0.3%. So that is quite a big disappointment. And it just reminds us that, there's still a lot of hard work ahead that needs to be done to actually remove a lot of the issues that's preventing us from much stronger growth. So in the October budget, I think the minister had a number there for the next 3 years of 1.8%. Is also a good reminder that there's still a lot of hard work and that currently what's playing out on the ground is still a very challenging environment.
By your assessment, what do you see as being a reasonable number for GDP growth for the full 2024 year? And then looking even further ahead, what do you see as being the growth prospects for South Africa for the next 2 to 3 years?
So for this year, 2024, there's only one quarter left. It might be a slightly better quarter. We know that there's some tailwinds for the consumer. Interest rates are coming down. We had the inflow from the two-pot system. It seems like that can actually add to some stronger retail numbers going into the back end of this year. So all in all, 2024, if we're lucky, we'll probably get to a 1% growth number. To put that into perspective, we always say that it's not a recession, but in my mind, the population is growing at 1.5%. So the economy is way underperforming the growth in population. So we're adding more people than goods and services, which per capita actually means that we're in a recession, and we've been in that for the last number of years. So quite a tough environment for 2024. If we look ahead, 25 next year, there's still a lot of things that we need to sort out, and that's not going to happen overnight. We think about the logistical issues, the rail network, what's happening on the port side. So our number for next year, coming off a very low base, is probably close to 1.5%. But we probably need the best of the next 3 to 5 years before we're going to see growth north of to 2.5%. By that time, sorting out a lot of these issues that's keeping us back. Also, just as a reminder that, this is local issues we're talking about. And unfortunately, I think next year, 2025, is also going to be quite a challenging environment from a global perspective. So we're one of many countries that's going to face Trump back in the White House, talking about trade tariffs on most countries, not very friendly towards a lot of emerging market, the BRICS countries. So we need to keep in mind that is going to add to a challenging growth environment for our economy coming from the outside.
I want to unpack this issue of the U.S. economic outlook and the global impacts and Trump's policies. But before we get to that, just something you touched on a little bit earlier. You mentioned the optimism around the government of national unity, and that having in recent months sort of boosted optimism around South Africa's growth prospects. How do you share this optimism, and in what way do you think that politics should be impacting the economics?
Yeah, so I think, let's look at Eskom. Eskom had a major impact on the economy for a number of years. That really looks like we're making some solid progress. So the lessons we can learn from that is, once you change the policy, when you open the door for other participations to actually come into the mix as well, it takes, the best part of 2 to 3 years before you really see the results. But what we can take as a lesson is that it actually works. And what we're seeing on the ground right now is we're busy with a similar process in terms of looking at the issues at the harbors, the rail network and the likes. So in time to come, if the Government of National Unity stick to what they are planning to do and executing on the policy, that's when we see the upside in terms of potential growth 3 years down the line. So to answer you, yes, we share the same kind of hope that this group of the Government of National Unity has got a target or an objective in mind that they are focusing on, removing a lot of the structural issues. And now it is the seriousness of making sure that we do implement that and being patient that these things do take time, that will eventually end up in the results that we are looking for.
Now, coming back to that point around sort of the global outlook, firstly, to what extent do you see Trump altering the Fed monetary policy outlook? And then secondly, how do you view the potential impact of the US Federal Reserve's policy actions in 2025 on inflation and growth globally?
Yeah, so as it stands right now, the Fed is independent. Trump is not always a fan of the Fed chair. He made that quite vocal. So given where we are right now, the Federal Reserve will keep on focusing on their mandate, which is to make sure that the inflation is under control. So if we look at inflation dynamics before, Trump moved into the White House in January, yes, inflation came down quite nicely, and that's exactly why they started cutting interest rates earlier this year. It is a little bit sticky. Inflation is battling to get below the central bank target, talking about the US specifically now. There's a number of reasons for that. Then if you add to that the outlook for the world next year with Trump in the White House, a lot of those policies are inflationary. As the world is adjusting and supply diversification is taking place, that is inflationary. So we're probably going to be in an environment where inflation remains quite sticky, which implies that the Fed, can't cut rates as much as they would like to, and probably take it back to where we've been before the pandemic. So we are seeing interest rates in the US probably finding a floor very early in 2025, given the outlook for inflation. Right now, the market is actually already pricing in that come January, there's not any further hike. So we'll probably see another hike now in December. Cut. Probably see another cut from the Fed now in December. And then come January, they'll probably be on hold to see what the data is telling us about the outlook. So I think for the viewers out there, the message from this is that inflation this time around is quite sticky, and therefore not only in the US but also in South Africa, interest rates are unfortunately not going to go as low as they've been, and the cutting cycle is probably going to be slower as most expected, given that dynamic.
We are out of time, but before I let you go, I just want your thoughts on just one more question. What is the impact of the disruption that the tariffs being proposed by Trump that you think will have on trade globally?
Yeah, so that is unfortunately, maybe one step back. So global trade's been slowing since 2016 when he was in the White House the first time implementing some tariffs. Then we had the COVID and the Ukraine war, where most countries realized that, you can't rely on a single supply source. So we've seen diversification into the supply chain, and that added to the slowdown in global trade. Now, Trump moving back, he's talking about big tariffs, different countries, different tariffs. That's just going to add to this slowdown that we've seen in terms of global trade and also the global economy altogether. It doesn't mean there's going to be a trend smash all out, because there is room for discussions. There might be a possibility for Trump and China to find some deal without very strict tariffs. But yes, the world is moving into a space where we all need to box smarter to make sure that we remain competitive. So there's some challenges that's going to play out in 2025 for most countries finding their most optimal trading partners.
Maarten, we'll have to hold the conversation there for now. Thank you for your insights and thank you once again for your time. That was Maarten Ackerman, Chief Economist at Citadel. We will take a quick break, but when we come back, we look at another installment of our Africa Side Hustle.